Good morning. It's Jeff Christian from CPM Group. It's about 11:30 on Friday, April 9th. I wanted to talk to you about gold and silver today. There's a variety of topics that I wanted to cover, so let's just dive into it. Our Precious Metals Advisory, which is our monthly report on precious metals, it's usually about 42, 44 pages long, was released last night. The cover article titled Hyperinflation is Unlikely, Inflation versus Reflation, covers some things that we've talked about in recent videos that got a lot of positive comments and questions. It specifically talks about the relationship between gold prices and inflation, gold prices and interest rates and inflation, money supply growth and inflation, and pulls it all together. And while I have talked about that in a video in the middle of March, the Precious Metals Advisory spends a little bit more time spelling it out. It's about a page and a half of text. In the gold section, we talk about the fact that the Hungarian central bank, which is called the Magyar Nemzeti Bank, actually bought about 2 million ounces of gold in March. We haven't, and just to put that in context, it's sort of like a tripling of their gold reserves. Hungary has some issues, rising right-wing government, problems with the EU, problems with other countries and such. And so it has been since around 2018, buying gold and adding it to its reserves to move away from the dollar as its major reserve currency. That hasn't showed up in the data. Our most central bank data only goes through February right now, but at the beginning of April, this week, the Central Bank of Hungary announced that they had bought that gold. It appears to us as if that gold probably was purchased from another central bank. And if you look at it, they bought 2 million ounces, which is a substantial amount of gold, and they bought it while the gold price was declining. That sort of suggests that they weren't buying it in the open market because it might have had a more apparent price effect, and the price might not have fallen, or the price might actually have risen if they had been buying in the open market. So the fact that they bought that much gold in a period when the gold price was weak suggests to us that perhaps some other central bank was selling the gold to them. And so when we see the final data as the year progresses, it may be that this sort of is offset by 2 million ounce sale by a different central bank. And of course, whatever central bank sold may not report it. Our view is, gold and silver are moving into a period of seasonal, not weakness, but lower and less volatile prices on a seasonal basis. We would not be surprised to see gold trade as low as 1,600 over the next 2-3 months. We wouldn't be surprised to see it trade as high as 1,800 in the next 2 or 3 months. We do still expect higher gold and silver prices later toward the last 4 months of this year and into 2022 and beyond. But that probably for the next couple months, we see the prices moving sort of sideways in relatively broad range. And silver, we're looking at a relatively broad range of $22 to $27. So that's the Precious Metals Advisory. You can you can buy the single issue on our store at cpmgroup.com, our online store, and you can also subscribe to it on an annual basis. It's very deep and granular. Now, turning to silver, I wanted to talk about a couple things. First off, just before we decided to record this, the London Bullion Market Association released its data for March, and it showed that London reported silver inventories of in London are now at a record 1.25 billion ounces. So it had reached a record in the first quarter of 2020, came down as some of that gold, silver was sold off, and now it's come back up and it's 1.25 billion ounces. This chart here, which is something that we have produced annually since the 70s, although it's quite a bit different from what it was back in the 70s. Shows you cumulative world production of gold, silver, and its distribution. And the data right here is, 57 billion ounces of silver that are estimated to have been mined since antiquity. Now, you can see the curve there, and it really turns up in 1866, which is after the Civil War, and you started seeing much stronger silver production, and silver production coming more from corporations as opposed to individually owned silver mines. So the data post 1865 has a high degree of credibility in statistics, and that amount is 46 billion ounces. So when somebody who doesn't necessarily know what he's talking about says 58 billion ounces mined through antiquity, you're full of it. What do you know? How can you possibly know the numbers? Well, the reality is that more than 80% of that comes from the last 160 years, and actually has a better level of trustworthiness as statistics. About 3.5 to 4.6 billion of that is in bullion and coin form. That's silver. Silver in readily fungible form. Here's a bar, maybe a 100-ounce bar. It might be a 1,000-ounce bar. Or here's a coin or a medallion. Readily identifiable as silver, readily fungible, buyable, sellable. We're in the process of producing our Silver Yearbook for this year, and we're in the process of updating that data. And that data has always been a thorn in our side. I took over the J. Aaron Research Department in 1980, which produced gold and silver reports. At the time, Consolidated Goldfields and J. Aaron were the only companies that produced basic supply and demand data on gold. And Handy and Harman and J. Aaron were the only companies that produced silver supply and demand data. I started looking at the silver data, and I found gigantic discrepancies with inconsistencies, internal inconsistencies in the data. And I said, clearly there's some issues in the statistics that need to be revised. Now, gold and silver are very secretive markets. In fact, all commodity markets suffer from a tremendous secrecy, which limits the accuracy of secondary recovery, fabrication demand, and inventories of the commodities. But because gold and silver are gold and silver, and they have 5,000 to 6,000 years of history as monetary assets, and they tend not to get lost or used and thrown away the way other industrial commodities are used, they have even more greater secrecy and more questions about the accuracy of estimates of supply and demand. And you see that. You see people who hold themselves out as experts in silver and gold, and you look at their statistics and you say, no, this is wrong. Forwards don't involve spot purchases and sales of commodities. You don't put investment demand in with fabrication demand. You have all kinds of stuff that just doesn't make sense in a lot of the data. But in 1980, I started looking at the silver data, and I said, there's an issue. And we went to Handy and Harman, and we also went to Consolidated Goldfields, when the research department was run by their head of corporate development, a wonderful person named Louise Duboulay. And we shared consultants with Consolidated Goldfields on gathering gold data, and we swapped notes. So we would sit down with Louise and David Potts before her and say, this is what we're seeing in the gold market. And they would say, this is what we're seeing. And we're saying, well, that gold that you're looking at, we think it's coming from a central bank. And they'd say, well, we think it's coming from investors. We would swap notes. And even though Consolidated Goldfields didn't do any silver research ever as Consolidated Goldfields, its successor took over the World Silver Survey when we walked away from the Silver Institute in 1994 after we had created the World Silver Survey. and that was their entree into silver. But Louise did not do silver, but she understood the methodologies of dealing with extremely secretive markets like gold and silver. And she gave me a lot of good advice. And we adjusted the data, and we've adjusted it 2 or 3 times since then. And we're going through another adjustment now. And the reason is, if you look at the disposition, 3.5 to 4.6 billion ounces of silver in silver form, that's an enormous plus or minus. That's an enormous margin for error. And when you talk to people in the core silver market, major producers, major refiners, major fabricators, major banks that are trading this stuff or leasing this stuff to the producers, the refiners, and the fabricators, and you say, well, it looks like it's, plus or minus 1.1 billion ounces. And they go, yeah, that's probably the margin for error. So it's a real issue for the silver market, which again, casual observers don't quite get the nuances. They see a guy in a white coat and they think, hey, this is science. It is science, but it's science in a very secretive market. It's like looking at subatomic particles and they say, okay, we've identified 17, but we're pretty sure there's 24 of them, which means there are 7 particles that we don't know about. And they just discovered and reported that they're finding evidence that, in fact, those 7 particles, or at least 2 of them, do exist. The other part is that 26 to 28 billion ounces of silver that is estimated to exist in jewelry, in decorative items, tableware, silverware, objects to art, and religious objects. There's a altar in Bolivia that is a ton of silver, 32,000 ounces of silver in an altar. No one's going to steal it. Can't run down the street with that. But there is a steady flow of silver that comes out of jewelry, decorative items, and other things like that, silverware, that gets remelted and what we call direct use. And when you talk to fabricators, jewelers, and others, they all say, yes, that's true. If you look at our data for our silver fabrication demand in Mexico, I think it's about 12 million ounces right now. But if you look at our research and analysis of the Mexican silver market, our estimate is that probably twice as much silver gets used every year, but it doesn't get refined into silver. You're buying old silver jewelry, you know what the caratage is, you're making new silver jewelry, so you melt it down and you recast it, and it doesn't show up. However, it does show up as fabrication demand. So you see the steady flow of metal that comes into the market. It's very secretive, how much is coming in from scrap, and you make these estimates and you make adjustments. So we're actually working through this adjustment, and we will, when we come out with our Silver Yearbook, we will be talking about where that is. But this is the nature of the silver market. And this is how it is that you can see when the silver price rises, all of a sudden there's a jump in secondary recovery, because there's an enormous amount of silver that's out there in that place. Now, we will be coming out with our silver report on May 11th. And I wanted to talk about a few things. First off, our Silver Yearbook is coming out on May 11th. And stand by, we will be releasing information about how people can plug into the webinar that we will be having for that launch. It'll be, internet-based webinar, as it was the Gold Yearbook one at the end of March, and as the Silver Fact and Fantasy one was on March 4th. You can order the Silver Yearbook from our store at cpmgroup.com. You can actually order the Gold Yearbook, which came out a couple weeks ago. And you can actually pre-order the Platinum Group Metals Yearbook, which will come out in July. These videos and other things that we're doing have gotten a lot of positive praise and have stimulated a lot of queries from individual investors saying, we know that CPM Group deals with large institutional investors, family offices, billionaires, millionaires, mining companies, refiners, smelters, central banks, fabricators, institutional investors. And a lot of our products and our research reports and our consulting services are relatively expensive and maybe out of the price range for individual investors on a more retail level. But we've had a lot of people ask us, what can you supply individual investor or a smaller retail investor? So we're coming out with a program for well, it's going to be a series of programs, really. But, you know, a package of research and consulting services that are lower priced and available to retail investors worldwide. It will include our yearbooks, gold, silver, platinum yearbooks. It will include a single copy of our precious metals advisor to show you some of the granularity of the data that's involved. And I should say that the yearbooks are excellent primers for really understanding the nature of these markets and getting just 200 pages of analysis, but mostly statistics, charts and tables with silver supply and demand, gold, platinum group metals, supply and demand data going back. But we'll have the precious metals advisory, a single issue. We'll have our market alerts that we send out when we see something like the Magyar Bank to paying clients. The trade recommendations for gold and silver will be there. Advanced warning of our weekly videos or special videos that we might be doing, special reports that we may do that we would make available to folks through this program. So a package of really, you know, weekly, monthly, quarterly, annual research and consulting, quarterly open forums, challenge your assumptions, sort of like the 2-hour webinar that we had on March 4th, Silver Fact and Fantasy, but less talk by us and more questions and answers. This comes out of a program that we had with the Silver Summit for many years called Challenge Your Assumptions, where we would, initially it was lunchtime, then it was a session, and then it was a dessert, coffee and dessert time after the annual Silver Summit banquet. And these would be, we had no presentation. We just come in and say, hey, what do you want to talk about? Ask us questions. How do forwards work? How do companies hedge? How does the US Mint handle its gold and silver purchases for its coin programs? You know, is the gold really there? How do central banks approach the concept of gold? Whatever questions you guys have, let's talk about them. And it came about because somebody basically had one of these crazy ideas about how hedging worked and how central banks and bullion banks and mining companies all colluded. And he said something that was just totally inappropriate and, for want of a better word, asinine. And so we said, well, you know, let's pull this together. And he said, it was very interesting because he said, he says, look, I've never talked to the chief financial officer of a major mining company. I've never talked to a bullion banker, but this is the way these guys operate. And I said, okay, well, I have talked to these guys. In fact, I worked for a bullion bank. In fact, I've worked for mining companies. In fact, I've been involved in tens of millions of dollars of gold hedges, tens of millions of ounces of gold hedges, and hundreds of millions of ounces of silver hedges. And we've done very well for our clients with the way we like to hedge. So we have experience here. He says, he prefaces his comment that he has no experience in this area. And you have to decide who you're going to listen to. Somebody who actually practices the trade, knows these people and understands it, or someone who doesn't practice the trade, has never practiced the trade, doesn't know anybody there, and really doesn't have an understanding there. So that's where Challenge Your Assumptions came from. Those sessions would go 2, 3, 4 hours long. We're not going to do that on the videos. We'll probably limit it to 1 or 2 hours, but we think on a quarterly basis, we will have Challenge Your Assumptions. And what we'll probably do is ask for questions to be submitted ahead of time so that we can organize them and collate them and combine questions that come together. And we will have not only retail investors, but we're also going to be inviting a full spectrum of our clients. Ultimately, those will be for our paying clients. The first one will be free and open to the public so people can sort of see how it is. And it probably will come this quarter. We're hoping to do it sometime, possibly in June, simply because of the logistics of organizing it. We may actually do it as early as this month, but sometime during the second quarter, we are rolling out the retail investor program today, and we will be choosing a time and starting to move forward on that challenge your assumptions open forum. We're also going to be doing another debate with Financial Sense Network, News Network, at some point during this quarter, and we'll be doing some other things there too. And then on May, we'll have our Silver Yearbook, which at 210 pages or so is the definitive work. It's a continuation of annual Silver Yearbooks and reviews and surveys that goes back to around 1969, 1970, 1971. And as I said, it's the grandfather of all silver research. That's about all I have for now. Have a good weekend. Enjoy the spring if you're in the Northern Hemisphere. Stay clean and be good to each other. We'll talk to you next week.